Okay guys, in today's video we are going to be taking another look at 𝗲𝗪1 and specifically the price action of the one coin. Guys, as we get into this, if you find it useful and informative, hit that like button. I really do appreciate it. If you're new, make sure that you have subscribed, hit the bell, tapped on all, and you won't miss another 𝗲𝗪1 update. Right guys, with all that nonsense out of the way, let's get into what's going on with 𝗲𝗪. So here we have the 𝗲𝗪 chart. This is paired with the USDT. We're on the weekly chart to start with here, and Binance is our data source. Now I'd like to start on this weekly chart because it gives everyone a good idea as to how things are forming for the long term and ultimately what the rest of the bull run looks like. And this is a fantastic way to kind of get your heads back in the game and understanding that the small micro price movements for one are less important than the bigger macro picture. So here we are on the weekly chart. There's a few things that are worth pointing out. We obviously have two upward trend lines, and these kind of kick-started things back in 2020 of the March crash, right? We can start to see this upper band here, and we had the lower band down there as well. So basically, when we crashed down in March of 2020, we found good support at this particular area. We rose up into our wave one, pushed to the upside here. And again, there was an interesting support line that was found at this point here. We found resistance. We were overbought, obviously, taking a look at that stochastic relative strength index. We reached 100. So we were going to get a correction to the downside, right? This correction to the downside then confirmed this upward trend at the bottom line here. Now, ultimately, that correction actually kind of came to a bit of a close and about the 28th of December, approximately the end of 2021. And then obviously that kickstarted this really good run for wave three, push to the upside where we saw the all-time highs get set. And then obviously we go into our fourth wave correction. And again, what's really interesting about this motion is obviously the testing of this area here, the retest of the lower bound, breaking through, coming back in, retesting it, and coming back and back testing the support line before going up and setting that all-time high. And then during the correction of wave four, we've tested this trend line twice now. So the trend line is incredibly strong at this point. It's got good traction, and the likelihood of coming back down into our buy zone is dwindling by now. Okay, so this buy zone down here is getting less and less likely that we're going to come back down into it. So for anyone who was paying attention, specifically in the member section, when we're talking about the buy zone, how we have these brief moments of dipping down into here, this was the accumulation zone for me. Okay, so the other things obviously is we have the yellow box just at the top here. Now this yellow box here is the area that we want to see a closed candle above. That really does signal us moving on up to the fifth wave where we can see 80 cent to $1 level 𝗲𝗪1 coming in. Okay, that's not going to be quick. We are on the weekly time scale here, guys, which means every single one of these candles represents 1 week. So in order to take the advantage of going all the way up to the fifth wave, it's going to take weeks and months to get there. So we're not talking about a quick get rich quick or anything like that, guys. This is investing for the long haul, specifically if you're investing down in March of 2020 through to understanding that we are likely to go up towards 80 cent, maybe push that dollar level. Now, obviously, in my opinion, is that this is going to be the back end of the year, quarter four, or even quarter one of 2022. Now, obviously, that timeline might not agree with everyone, but those are the timelines for pretty much all of these altcoins that are out there. Investing now is at the bottom of wave four, or just a little bit north of that bottom. And ultimately, this means that you're going to be able to capitalize a little bit. It's going to be probably around that kind of 10x position on 𝗲𝗪 today. Of course, if you were getting in much earlier, I mean, we were talking about 𝗲𝗪 for quite some time, pretty much since the channel started. If you were invested in March of 2020 and sold in March of 2021, you would have seen 18,943% in gains. And again, obviously, there's no bank that I'm aware of that would offer you 18,000 or just shy of 19,000% in profits in just 1 year. That's a really nice APR. Now, obviously, we've still got these potential moves to the upside. And I think if we just take this current position, when we move this up to about that 80 cent area, it kind of shows us about another 1,000% in gains to kind of still here and on the table. So lots to still play for if you're looking for a 10x kind of position. 𝗲𝗪1's pretty good at that. Now, obviously, you can stake 𝗲𝗪1. We do run a validator pool, and with that pool, you can earn even more returns on your investment, right? So you can have that investment constantly earning more one tokens for you. And again, if you're a part of our pool, we actually do give an airdrop once a week to one of our delegators, right? We give away 1,000 𝗲𝗪1. So check out our Twitter if you're interested in that kind of stuff. Now, let's talk about what's been going on most recently. So obviously with the weekly chart, and we understand the patterns and the push to the upside. We also have this stochastic relative strength index that's currently now actually risen to 7.1. Obviously, anything below 20 is oversold. This was down during this particular crash down here at absolute zero, right? We reached completely rock bottom, so we were going to start to push the price back up. That's what you've seen so far. And basically, we rose this up to about 4.9, and then we've dropped it back down a little bit, but now we're actually up here at 7.2. So we're doing okay. We're obviously trying to get corrected out of this weekly chart into an area that we're not oversold, and we can slowly push the price up and push this stochastic relative strength index up here to the overbought area. In the same way that we've seen multiple times, we take a look at where we were during the crash of 2020. We were right down here. We take a look when we were peaking for wave 1, we were overbought. We take a look at where we were during this correction wave down here for wave 2, again oversold, and we push up to wave 3, we're overbought. We push down to wave 4, we're oversold. So, you know, what do you think is going to happen, guys? We're going to be pushing up to an overbought situation for the last leg, wave 5. Now, obviously, these are 5 impulse waves to the upside, which is very clear to see here on the weekly chart. If you take a look at the daily, take a look at the hourly, etc., etc., there's going to be waves within waves within waves within waves. It's just really easy to actually spot these things on the bigger macro pieces, such as the weekly chart. And obviously, you can get into a lot of detail as you find additional waves within each of these waves as well. We're not going to go into too much Elliott theory in this particular video. Just keep it nice and simple so you understand what you are looking at. Right, let's jump down into our daily view. Okay, so here we can obviously see what's been going on. The yellow area down here is the buy zone that we've been talking about. Okay, so we know that this is the buy zone. We have our trend line here that we've been bouncing from. We can obviously see that when we come into this area, right, we're basically oversold, right? We can see that we come down here, we're oversold again, reaching absolute zero, right? So you know that you're not going to spend too much time in this buy zone, but when you do come down here, you want to take advantage of it and you want to accumulate as much as you can. This being said, we are heading back up on this daily chart to an overbought area, so we are looking to find some resistance at sensible areas and look for a reversal and find good support. Right now, what's really interesting is this area here is looking like a good strong support line for us. If we were to drop down to something like 6.7, that's going to hold well, I feel, and that could be a good tell to continue this motion to the upside. Now, unlike the relative strength index, the stochastic relative strength index actually gives us a bit more information when it comes to trading sideways, right? The relative strength index in itself is fantastic to be able to indicate to you whether or not we are overbought or oversold, and whether or not we are continuing to push the price to the upside whilst we're actually decreasing the momentum of a relative strength index. The good news here is the stochastic relative strength index is more sensitive to price when we're trading sideways. So you use an RSI for trending when you're trending up, and if you're trending sideways, you use a stochastic RSI. This allows us to actually have a more sensitivity around the price action, so we can understand exactly what's going on and we can time things a little bit better. So right now on this daily chart, we are approaching this overbought area, and we'll obviously see what that looks like on the hourly as well. We are mindful, guys, that ultimately, all of these smaller time frames, they do build up to our weekly, and we know that our weekly is at 7.2 and is definitely oversold, right? So we know that our weekly is oversold, but we're approaching overbought on our daily, which means that we can have small kind of corrections and micro movements inside our daily and inside our hourly charts, but our macro view, our big weekly chart, should be continuing to grow. Okay, so obviously we don't generally mind too much about 1 or 2 days when we are spiking this up and down all over the place, as long as we continue to move that macro piece, that weekly chart, to the upside. So obviously we tried to start with the weekly, go to the daily, go to the hourly, give you guys an idea as to how things are forming. Right, so obviously this is the key area up here. This is the area that we are looking to get a closed candle above, and getting the closed candle above here is going to really be the strong signal to push us to the upside. So this is mindful of what's going on with this area here. This represents the Fibonacci retracement area of the 618, the 702, and the 786, okay? And I think it was taking this high area here and this low area here. Okay, so again, this is an area that we're looking for. We're looking to kind of get this closed candle above this area. Now, getting a closed candle above, basically, if we can get a closed candle above 13 cent, it is going to be a really strong signal to basically usher in those bulls to really take control of the situation and push us back to the upside. So really mindful of that. Now, let's jump down into our hourly view. And here we can see a slightly different narrative, right? So obviously we have the buy zone that we dipped into briefly, and you can see that we're not down here for too long, right? We were pushing around a little bit in here, but ultimately, you know, within the space of a few hours, you're out, right? So this is a good area for accumulating. Now, what you saw was some interesting stuff, right? Where we had our weekly chart really oversold. We had a daily chart oversold for a stint as well. And ultimately, there isn't too much you can do with your stochastic relative strength index on these smaller time frames if your larger macro piece is so heavily oversold. So what we're looking for here is shifts in momentum with around this stochastic relative strength index to find out whether or not we're going to continue the push to the upside. So like we said on our daily view, right, we are overbought or approaching the overbought area on the stochastic. Here on the hourly, though, we are oversold. This is basically indicating that we are likely to continue the growth and continue to push up on Harmony 1. And by the time you're actually watching this video, I would have thought we would have a fair few green candles ahead of us at that point, and we should start to be approaching some of these areas up here around maybe 7.4, 7.45, something like that by that point in time. So again, we've got lots of momentum here now ahead of us. So what you find is we push the price up, and then we can drop this stochastic relative strength index without actually doing too much damage to the price. Now, we've actually had a bit of a pullback here in line with what Bitcoin was doing. Bitcoin had surged a little bit and pulled back down to 34K. Again, strong support there for Bitcoin. So right now, with everything else going back into this oversold area, we're looking for Harmony now to continue this growth. We're looking at 7.9 as the obvious area of next resistance. So we're looking to try to grow our way up to this area here before we get another correction come in. So again, if we have another scenario that we saw like this, but happen over here, or take us right up to this resistance line. And if we can get above this and we can turn this into a support area, that would be a great way for us to continue the growth of Harmony. Okay, so that's going to be pretty cool. Now, obviously, that stochastic relative strength index is great, and it's always good to know what's going on there. But we do like to pair it up, considering that there are potential trends here, is to bring in the relative strength index as well. So right now, you can see that we have pulled this down. We're actually at 42, so plenty of room to grow here on the relative strength index, along with, of course, that stochastic relative strength index indicating that we are oversold. So everything here looks like it's going to be pushing to the upside on the hourly, and the daily looks like it's going to go from its pretty comfortable area that it is right now into an overbought area, which means tomorrow is more than likely going to be the day that we'll see more red for Harmony. So again, I'll be mindful, but again, it's always important that we do reference the charts to understand whether or not we will expect red or whether or not the green candles will continue. And obviously, when we're overbought, as what we saw with Bitcoin, is it can be sustained for quite a serious amount of time if there are external factors at play. In the case of Bitcoin, we saw the institutions were manipulating the price of BTC to get it below 30K. Lots of people were then shorting Bitcoin, which ultimately meant that the institutions could basically rise the price of Harmony, liquidating anyone else who was shorting using leverage. This is a pretty standard play. You see this quite often. You also see one of those old tricks in the book of a large player, a whale, setting up sell orders to basically make people think that they are going to be selling on dropping a significant portion of their stock on the market, only to have that basically cancelled off at the last minute once everyone else has kind of shorted, reversing it and then pushing the price in the opposite direction. This is a pretty common play, and you can Google a lot of these different strategies that traders tend to use, and hopefully give you a bit of an insight as to how things will be actually playing out. Now, in the case of Bitcoin, that's what's happening. You're seeing lots of manipulation, lots of kind of patterns forming in the data that are indicating that there's people manipulating the price. But obviously, the entire crypto space does follow Bitcoin, so we're mindful of whatever happens with Bitcoin will also happen here to Harmony 1. That being said, guys, with all of these micro price movements, all these kind of micro price manipulations on these smaller time frames, it's always important that we keep an eye on what's going on with that macro piece. Where are the expectations? What is likely? Albeit there's lots of probability, right? There's the probability that we are going to drop down. There's 20K scenarios for Bitcoin, right? It can happen, but the question is it probable that it's going to happen? It's very unlikely that it's going to happen. In fact, we're more likely going to be pushing up, considering the positions on those stochastic relative strength indexes. So basically, guys, it's always be very mindful over the bigger macro piece, understand where we are going towards the end of the year, beginning of next year, and do not fall victim to what's going on those smaller time frames, including those hourlies, those 4 hourlies, 8 hourlies, dailies, whatever they are. Be mindful and always pay attention to the bigger view. Check out the weeklies, check out the monthlies, and you should be in a pretty good, strong position. Guys, if you found this video useful and informative, do go ahead and hit that like button. I really appreciate it. If you're new, make sure you've subscribed, hit the bell, tapped on all notifications, and you won't miss another Harmony One update. Guys, with this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.